Alright, today we're going to be talking about open interest, that mysterious number that everyone thinks they understand, but they often end up misusing it. And when you misuse something you don't understand, you're gonna end up losing money. So this is what I'm going to do for you guys today. I'm going to break down open interest for you guys in a way that will stick with you for life. You're going to know exactly how to use it and when to use it to properly derive edge from the markets. And 3, you're going to end up laughing at people who do misuse it. Alright, so let's begin with what exactly is open interest. We'll start with the boring definition. Open interest is the total number of outstanding contracts that have not been settled yet. Essentially, the total number of open contracts that do not have offsetting trades to them. But again, this is a boring definition, and at Mango, we don't do boring. So let's go ahead and do something fun instead. Let's say we have a very simple example of only 2 market participants, John and Sue. John wants to buy Bitcoin and Sue wants to sell Bitcoin. Now let's assume that John and Sue decide to exchange 100 Bitcoin between the two of them, right? Because they're exchanging 100 Bitcoin, assuming that one contract is 1 Bitcoin, they are essentially signing 100 contracts. So between John and Sue, we now have 100 contracts that have opened up. Right? And since we have only 2 market participants in this entire market, that's your open interest for the market, 100 contracts. And this open interest of 100 will remain 100 until John and Sue settle their agreement between the two of each other. So if you think about it, John is long Bitcoin and Sue is short Bitcoin. So the open interest doesn't really tell you anything about bullishness or bearishness on its own. I want you guys to know that open interest goes up, it means that 2 participants on both sides of the market have made an agreement. Someone who is bearish and has sold, and someone who's bullish who has bought. So open interest on its own doesn't tell you anything about bullishness or bearishness. What it does tell you though is that at that time in the market, at that particular juncture, there are 100 Bitcoin worth of interest between market participants, right? Because Sue is on the hook for selling 100 Bitcoin and John is on the hook for buying 100 Bitcoin. Right? Okay, so now let's go ahead and talk about how is open interest calculated. How does it go up? How does it go down? Once you understand this, you'll be able to put on some really juicy and profitable trades. But this is the bit that catches a lot of people off. I'm going to break this down for you guys very, very simply. We're going to go through a few scenarios. And once we're done those scenarios, you're going to understand open interest like a pro. Okay, so let's begin. For scenario 1, we're going to continue with our previous example where John and Sue agreed to trading 100 contracts between the two of each other. Now let's assume that John wants out of his side of the agreement. Maybe he's not interested in the trade anymore. Maybe he's seen price going down and he's like, you know what, I'm just going to cut my losses. So he goes up to Sue and says, hey Sue, I bought 100 contracts from you for $1,000. I'm no longer interested in that trade. Can I sell that back to you? And Sue says, sure, I'll buy those back from you, but I'll buy back from you for $900. John's like, oh, okay, fine. So John takes his $100 loss and sells his contracts back to Sue. What they've done over here, guys, is they've settled the contracts that were outstanding between the two of them. And if we bring back our boring definition from the previous slide, we'll remember that open interest is the total number of outstanding contracts that have not been settled yet. Now, there are 0 outstanding contracts because they just settled the 100 contracts, right? So our open interest is now 0. But let's take a step back. Let's say John wanted to de-risk out of his trade, but he didn't want to de-risk the entire trade altogether. Let's say he only wanted to sell half of his contracts. In that case, he wouldn't be selling 100 contracts, he'd be selling 50 contracts, correct? So now, what would be the total number of outstanding contracts? Well, they would still have 50 contracts between the two of them. In this scenario, the outstanding contracts dropped from 100 to 50. There are still 50 contracts outstanding that have yet to be settled. So in that case, we would have 50 as our open interest. So the key to note over here, guys, is that open interest will drop down if outstanding contracts are settled, and it will drop down depending on how many of the outstanding contracts get settled. Now, for the next scenario, let's spice things up a tad bit, shall we? Alright, now in this scenario, we are going to add a new market participant to our very, very tiny market over here. Jill has entered the fray. Now, we're going to go back and build on our previous scenario where John wants out of his side of the contracts. But this time, John isn't selling his contracts to Sue. This time, he's selling them to Jill. This is where things get interesting. If John is letting go of his side of the contract to Jill, what would happen to the open interest? On first thought, you might be thinking, hey, John is selling his 100 contracts, so open interest should go down, right? But remember, open interest only goes down when the buyer and the seller settle their contracts. Over here, that's not what has happened. The buyer and the seller have not settled their contract. All that has happened is that the buyer has changed hands from one person to another person, right? So first, John had the buy side of the agreement, and now Jill has the buy side of the agreement. So all that's really happened, guys, is that the buy side of the agreement has changed names. Sue essentially now has a contract with Jill. So the open interest doesn't change at all. It in fact remains exactly the same. It's only if Jill and Sue now settle their contracts that this open interest will drop down. And that's the crux over here, guys. Open interest will only go down if there's settlement of contracts. If all that's happening is that contracts are changing hands constantly, open interest will remain the same. Volume will go up because there's more transactions happening, but open interest will remain constant, and that's exactly what has happened in this scenario over here. Even though we are seeing John exchange contracts with Jill, the open interest has remained the same. So what would it take for open interest to actually go up? Well, let's say we had this scenario instead, where it wasn't John who was letting go of his buy side of the agreement, but we had a new market participant entering. Let's say his name was Jake. Okay, so in this scenario, John is holding on to his contracts, and it is a new market participant who is opening up contracts with Jill. In this case, we have both new market participants, new contracts, and John has held on to his contracts, right? So open interest would actually go up in this scenario. And how much would it go up by? Well, we simply have to look at the open contracts between Jill and Jake, and we can see that we have to add another 100 contracts to our open interest, right? So the total open interest in this scenario would be 200 contracts. So we've gone through multiple scenarios now. We've shown you a scenario where open interest has gone down. We've shown you a scenario where open interest has stayed the same even though a new participant was added. And finally, we've shown you what it takes for open interest to actually go up. And now that you understand open interest and why it moves up, why it moves down, we can go ahead and talk about how you can use this information to put on some really juicy trades. Alright, so now we're going to go through an interactive exercise to solidify everything we've been talking about and allow you to use open interest in your trading. And by the way, guys, if you've enjoyed this simple explanation on open interest thus far, please hit the like and the subscribe button. It lets me know that you guys are enjoying this kind of content and motivates me to do more of these kind of videos. For example, the explainer video I did on funding rate was really well received, got a lot of likes, a lot of subscribers, and it motivated me to do this video on open interest. So let's begin this interactive exercise with a summary of what exactly is open interest. When you think about it, open interest is nothing more than market participation. On its own, it doesn't really tell you anything about bullishness or bearishness. Remember, open interest is the total number of open, unsettled contracts between both buyers and sellers. So every contract has both sides of the trade to it. However, open interest can be used very effectively when you combine it with price, specifically price trend. So watching the price trend along with what's going on with open interest is essentially telling you what's going on with market participation in the direction of the trend. And that's the crux of it, guys. When you think about it, open interest is simply showing you the strength of the market participation. That's all. But without price trend, it's useless information. Now, to really drive the point through, let's go through an exercise. So let's begin with a simple example. Let's say we have price that's trending towards the upside. And then we have open interest that's also trending towards the upside. What does this tell us about the market? Well, it tells us that as price is increasing, we have increased market participation, right? So increased strength in market participation while price is moving towards the upside should give you confidence, increased confidence in the direction of the trend. So what this story is telling us is that as price is increasing, we are seeing more people eager at these prices. But remember though, there's both sides to every contract that is opening. For every long that is opening up, there's a short that's opening up as well. A lot of people are going to flat out say that, hey, this is bullish because longs are opening. No. Don't get caught in that mindset, guys. Longs and shorts are both opening. Every contract has both sides to the story. But what you can say is that, hey, because there's more participation over here, if price continues to go up, those shorts that did open are going to feel increased pressure, so they're going to have to close and hence turn into longs. That is a completely fair thesis. But if you see anyone saying that, hey, shorts are opening up because open interest is increasing, that doesn't make sense because a contract has both sides, right? But if you start seeing increased open interest in the direction of the trend, you can start thinking of, hey, those shorts will start feeling pressure. So the market is going to start strengthening towards the upside because price is moving against those shorts, right? So simply put, price up, open interest up means that trend is likely going to continue up. Okay, now let's go through another example. This time, we're going to have price actually declining, but open interest is still going up. So open interest is still up, but price this time declining. What does this tell us about the market? I'm going to give you guys a moment to quickly pause the video and just think about it. Good? Okay. Remember what we said. When open interest is increasing, it means that we have increased market participation, right? Which means we have increased participation in the direction of the trend. And at the moment, the trend is towards the downside. Now again, guys, I must emphasize, don't get into the mindset of saying, hey, shorts are opening up brand new positions. No. We have both sides of the trade being opened. However, longs are under pressure because the trend is down, right? So as price goes down and down and down, those longs are going to be forced to close out at lower prices. Hence, the buyers turn into sellers and thus pushing price even further down. So again, this time, open interest up, trend down means the trend is likely going to continue lower. Okay, so far we've gone through two examples where both times open interest has been increasing. And both times you may have noticed that all you have to do is simply look towards the direction of the trend and bet on that side, right? Open interest up and trend is down, trend is likely going to continue down. And over here, open interest up, trend up, price is likely going to keep trending towards the upside. So bet in the direction of the trend when open interest is up. Now let's talk about open interest going down and what we can decipher from it. And the truth is, guys, you can't really decipher all that much from open interest going down. Not on its own, even with the price trend, right? Because you want to think about it. Open interest is an indication of market participation, right? It's not an indication of shorts opening or longs opening. Often people are going to make the misconception saying that, hey, price is going up, like in this example over here, and open interest is going down. It means that longs are closing out their positions. You got to be careful. And yes, you could say that, but you could also say that shorts are closing out their position because there are two sides to every contract, right? So all that this is telling us, guys, is that at this price point, we have reduced market participation. Price is still there, but we have reduced market participation. We are going to need additional indicators, additional information to make a bearish conclusion or a bullish conclusion. This is where a volume indicator could be extremely helpful. Similarly over here, when price is going down and open interest is going down, people could be saying that, hey, longs are closing out their positioning. But that's simply not actionable information because the other side of the trade has also closed out their position. What makes open interest so interesting is that it tells us how many market participants are currently likely going to feel pressure as the trend goes up. Open interest going down on its own doesn't tell you anything. You're going to have to add another indicator to this. And here's the only cheat sheet you'll ever need. You see open interest go up, look towards the direction of the trend. You see open interest go down, look for more information. Now, for the purpose of this video, I wanted to focus only on open interest. But if you guys want me to continue the series and talk about other indicators you guys can use along with open interest, let me know down in the comments below. And if you have specific questions that you want to ask me, don't hesitate to reach out to me on our Discord. We have a strong family vibe in our community. I'm really proud of everyone in here. Everyone's looking to help each other, asking questions, answering questions. So don't be shy. Come on in and join the family. Also, if you are a beginner or intermediate trader looking to take your trading to the advanced professional level, then go ahead and check out the Mango Seed program. I've built this course over multiple years now. The curriculum is vast, so only if you are looking to get serious about your trading should you check out this program, because it is a massive time commitment. As you can see, there's a lot of content in here, but it will take you from beginner to intermediate to advanced. You also get access to the private seed channels as well in our Discord. And with that, guys, do the Mango way, do the easy way, do the stress-free way. I'll see you guys in the next one. Ciao.